Welcome to X6IM YouTube channel. In this video, Ankit sits down with Bluebird, an RWA platform that is bridging the gap between Web 2 and Web 3.
This is a tokenized coal mine, essentially.
Bluebird has two sides. One side aims to bring Web2 businesses on-chain by streamlining tokenomics, cap table management, and token deployment across multiple blockchains.
As a founder who knows very little, they can come on, build tokenomic structure, a cap table, and deploy it, and not have to have a developer.
And the second part of the business is focused on bringing real-world assets on-chain.
This one's worth more than a couple of $1 billion, this total asset.
In this video, you will get to see the demo, along with a glimpse of the future of real-world assets on-chain.
We've got $32 billion of emissions reductions assets minted on the platform.
Welcome to XXIM Podcast, your home of decentralization. Today, I'm here with GP and Corey from Bluebird, first RWA project on XXIM. Welcome both.
Hey guys.
G'day.
Awesome, guys. Good to have you here. I really wanted to have you guys over to discuss what you're building, like your technology stack, along with regulatory stuff that's happening in the US. So let me start by asking this very basic question. How do you define Bluebird to someone who's never heard of it?
Well, that's a good question. So I suppose it depends on what area you're coming from. So I'll reverse that question a little bit, and I'll back up and explain a little bit about why Bluebird exists in the first place, and that will help to answer part of that question for you.
Yeah.
And we'll lead into the rest of it. So Bluebird exists due to my personal experience in the Web3 space. I've helped launch around 100 projects. I've advised about 40 projects over the last decade. So in that time frame, there's been a plethora of issues that keep reoccurring for founders, and oftentimes it's sorting out their tokenomics, it is sorting out their cap tables, and it's deploying the token. They're the three core issues that either they run into issues with it, or they just really spend a lot of time doing it. So that's why Bluebird first existed and what it first covered.
Right.
However, since then, we've expanded. So we've gone out since that point to real-world asset tokenization. We've got a marketplace for that. We've got an investor portal that's really bespoke and handles a lot of what a VC needs to know when they're dealing with a lot of these projects as well. Mm-hmm. So I suppose if I was to explain what we are without explaining what we are, it's more so what we're becoming. Right. And that's an ecosystem that serves basically not all, but most Web3 verticals that are currently live in the industry at this point.
I see.
Does that kind of covers that for you?
Yeah. I think so. I think there are a few different areas it seems you guys are sort of touching, right? And Corey, you explained that it was out of your own necessity, right? Could you please drill down onto that necessity? Because I think I want to really focus on why it's needed in 2025. I think it's really is the right year, perhaps, for Bluebird to exist.
Yeah, definitely. So, well, look, to be honest, it's more so the same problem existed 4 or 5 years ago, and as it does today, except there's just more of it. There's more founders, there's more projects, right? So it's kind of becoming an epidemic of issue at that point. But the core issues that I was facing was really that founders, when they would build out a tokenomic spreadsheet, let's use that one for an example. They weren't always a whiz on formulas. So they would either go and download some sketchy template with goodness knows what macros built into it, or, it's not a secure way to do it. And then if they accidentally break it, they don't know how to fix it. So that's one of the issues. And then oftentimes, because I also have a VC as well, when we are getting pitched by a project and we say, hey, can we see your tokenomics? They'll give us half of the information that we need to be able to do our due diligence on their token.
Right.
And so we were dealing with half of the information or broken, sets of data. And so that was the one issue on that side.
Right. So Corey, can I jump in here? Sorry. What was the issue with the tokenomics? For me, the way I think about it, right? I'm an investor, for example. I invest in projects. I'm not a developer, right? But when a developer actually creates this tokenomics, they have to think through a few different things. So what were the things that you saw that were not working for the developers, right? And what you guys trying to help them? So what were the issues there?
Yep. So you're going to laugh at one of the most common issues, and you'll think, how could people possibly make this issue? But you'll be surprised. And that is when they set their buckets, which a bucket is like a private round, a team round, all of that, right? Sure. And the percentage of total supply that each belongs to each of those buckets. Now, oftentimes they'll either have not enough, the percentages don't add up, or there's too much.
I see.
So you can imagine what happens when they go to deploy their token and their vesting schedules. Something breaks.
I see.
And it's by that point it's too late. They have to redeploy. They have to fix it. If things can go really wrong, because if they've oversold around and they've allocated too much of a percent, where are those tokens coming from? They have to pull it from another bucket, and that could disrupt other areas of their business. So that's one issue. That's probably the most common one. I mean, I could probably go on for days about just the tokenomics side in general itself.
I think I'm gonna try to frame the questions more around from someone who doesn't know these things, right? From what they need to. What developers need to think through when they're deploying the token or even going through tokenomics. So that example you gave is very valid, and I can see why someone has to use a service like yours.
Yeah. Well, I think sorry, Jiffy, you go.
Yeah, one thing to make sure we look at is it's not just developers though. Like the tool suite is designed across the board for multi-use, right? So, which you touch on a key part. Development in the past has been one aspect of getting tokens deployed. We kind of eliminate that. I mean, because we have an engine that actually handles that, and you don't have to be a developer. So from a skill level, it does scale from basic fundamentals up to advanced users. And the advanced users, I would say that they're looking for something more bespoke. Then we're talking about a different layer altogether. So I just wanted to put that out, that it's like it goes beyond that. It's like as a founder who knows very little, they can come on, build tokenomic structure, a cap table, and deploy it, and not have to have a developer.
Right. And I think GP is such a good point, right? And that really is one of the reasons, another reason perhaps why I wanted to have you, because you guys are trying to bridge the gap, right, between Web 2 and Web 3. A lot of founders perhaps that are coming from Web 2 wouldn't have a clue what these things are. But by, again, going through your platform and you guys have simplified it, now they can actually go through and don't have to understand and know the history behind these things.
Right. Exactly. I mean, you hit the nail on the head with that one. That's a very large part of our business. And our business model.
Yeah. So just to quickly circle back onto some of the things the issues that I found as well, because I think the next one's quite critical and very important, I think, for projects as a whole, and that's how they manage their cap table. So it's not just about rounding errors and eliminating, someone got too little tokens and what happened and things like that, which again is very common. That's not even the biggest issue that we're kind of helping with on that side. So what it comes down to, and as an investor, you've likely dealt with a lot of projects that maybe they didn't perform too well, or they could have quite easily performed a lot better going by who was on their cap table. Now, traditionally, a cap table, believe it or not, is still just in Excel. They just manage it in Excel. It's just names, email addresses, a bit of a blurb about who they are, how much they've requested, how much they've been approved for, how many tokens they're getting, and their wallet address, and a TXID if you're lucky. So for funding the allocation there. So what's often missed out though is, and at least it was the status quo leading up to 2025, is that most investors would promise, hey, we're going to help your project by I don't know, opening up our network to you, or we're an influencer, we're going to help promote your project, and this is our ticket size that we want. Now, what often happens is in that spreadsheet, once the token launches, no one ever looks at it ever again.
Right.
It's done, right? It's done its job. All those promises get forgotten about. And all of a sudden, the project is wondering why they're losing traction, why the community is starting to fall apart and go dormant, things like that. And a lot of that can be prevented if they rely on all of these promises, because I think you'll find once they really start to audit who's promised what and how much has been promised, you'd be very surprised at the enormity about what is actually there. It's like a gold mine for this project to access, but they just don't. And so what our system does, and I'll kind of give you a quick walkthrough in a minute, but what it does is it actually highlights in the system of who actually has a value add, what they're promised, and with a permissions gated access, you can give access to someone who might not be allowed to see the financial information or their personal contact details, but they can see who they are, maybe a Telegram handle, and what they're promised, so that they can start to manage that properly like a company should, and utilize those promises. So that's one of the hugest things, at least advising projects that I've found, is that they just don't utilize their cap tables, period.
As you say, right, it's all actually just on Telegram or through Excel sheet or Google Docs.
Yes.
It's not actually on a smart contract. So I'm assuming you're building that onto a programmable layer.
Not so much programmable, but it's more so it's in it sits on a database, not a Web3 database, but it sits on a database, but it links to the investor portal. So you, the investor, you can see your allocation, you can see if your promises are being met, because the system won't actually deploy against what you can see. So they can't trick you. There's no way to fool it. What you see on your investment data table is what you're getting in that project when they go to deploy that contract. I'm sure someone's might be sneaky and try and change something last minute, but you'd have to be a special kind of someone to try and do that, right? So it's inherently, how does the saying go? A padlock won't stop a thief. It will just keep honest people honest.
Yeah.
So, that's what our system does. It just keeps honest people honest, and, it allows that transparency on both sides.
I think one other one, which perhaps is part of what offering you guys do, is token deployments. So what exactly is the problem perhaps you're solving in the token deployment, or issues you've seen with the token deployment?
Yeah. Okay. So issues, I briefly mentioned one earlier, which was the rounding errors. So that's in investing contracts.
Right.
That's a terrible issue to have. You've got to redeploy everything, your whole your token and vesting contracts from that point. So that clean data sets aside, our system will not deploy a token that will break. Then you have all of the time and money saving components. So our contracts are pre-audited. That saves 20 grand. Sure, you could use a cheaper auditing firm. It's still going to cost you 5 grand.
Yeah.
And 2 weeks. So ours are audited by one of the top global auditing firms, so it saves them that time and money, as well as they don't need a dev. So, and I'm not saying devs are obsolete for that. But they don't need to actually hire a specific, like a Solidity dev, if they didn't previously need one, right? So it opens the door for another issue that would have happened, or has happened, in the past, not always, but has happened. And that's when, if you don't hire a trustworthy developer who deploys your contracts, they can put their own wallet address in as an admin. And that's where you see a lot of token hacks come from. You're often looking like, oh, it's an inside job. That's how it's done. It's at inception.
I wasn't aware of it. Has it happened actually?
A lot.
Really?
Yeah, when you go look out in the wild, some of the larger ones, not to mention one in particular, but some of the larger ones all had inside addresses, and now, did they have them buried pretty deep? They did, but that wouldn't have happened in this system,
right?
Quite simply.
And these were big hacks, like you're talking about big portion of the allocation that went to these developers here.
Some of it was hacks, but some of it was actual misappropriation of funds also. Because you
Right.
got to remember, it's not just about hacks; it is also
No.
about misappropriation of funds. And in that respect, this system kind of it wouldn't prevent it, right? Someone
Mhm.
could be on a cap table theoretically, could have the wallet address, could be
Yeah.
in the structure somehow.
Yeah.
But what it does do is gives you a direct line of sight of traceability.
Mm. Yeah. So I was going to say, why don't we jump onto the demo?
Definitely. So what we're looking at right here is the Web3 Founders tools.
Mhm.
I'm not going to go in
No.
total detail of every single aspect of what it does. We'll kind of speed run it
Yeah.
a little bit. So we're looking at a finished and published set of tokenomics. So you can see down here, you've got all of your different buckets.
Yeah.
Your supply, everything that you could need in a set of tokenomics, as well as your unlock schedules and things like that. And then a waterfall chart of the emission schedule. So it calculates that just on the fly as you're doing it. So let's just assume you're a project that has finished that, and they move over to their cap table. This is where they would start to import. They'd come over here. They'd import the particular rounds that they want to allocate companies or people against. We've already imported some for this demo, so that's why they're not highlighted. And you've got some core stats up the top here that it records, as well as each round. And the people against each round.
Corey,
So,
sorry, I'm going to jump
yes.
in here. Could you please go back a screen?
Okay.
What we're looking here is you have, so this is
Yeah.
a sample token blue demo with the ticker you've deployed here with a total supply of 100 million, right? And a circulating supply of 13,490,000, right? So basically, this is for developers or whoever wants to create this tokenomics. So that's the first step, right? They'll have to plug in all this detail, right? This is all manual detail, right? In terms of
Yeah, so we've got a wizard, or you can just highlight where you can edit if you want a quick cheat way of knowing where you can click, and everything else is auto calculated apart from the green areas. But it's for founders. It's really designed for founders to come in, and when they click on to make a new model, they're greeted with either a quick or an advanced setup.
I see.
And that will guide them through that process. They can go quick, and then it's asking them questions. What chain code do they want to deploy on? Total supply, what's their ticket? It goes through each step of the way, and they don't really have to. Our system holds their hand through that if they don't know what they're doing. If they do know what they're doing, it's just a speedy way for it to be entered.
Right.
It's really that simple. Yeah.
So what how many chains you can deploy on?
We've got eight that are currently supported, and we're adding more every week.
What are those chains?
We're going.
An important note of that is we are agnostic. So like Corey mentioned, we have 8 that are currently deployed. We have a roadmap that continually deploys based on that, starting with EVM and then going more boutique from there, or custom from there as needed.
Right. So currently you support 8 chains. So if I'm a developer building on Ethereum or Polygon, I see all the EVM ones here you mentioned.
Yeah, so we've got Solana support incoming. It's just going through its auditing process at the moment. But we've got a reward asset focused one, Red Belly Network. We've got the most common, a lot of the most common one. We've got Sonium as well in there. So there's a lot, and I mean, there's not a lot, but there will be a lot.
Like for example, we have Optimist and Based in now, right? There's a series of them, again, of a roadmap of chains, mostly sorted by priority, but we will be covering a large ground on those over time.
Right. So now, as a developer, I can come in, choose the chain I'm building on, plug in all the details, break down the seed round, private sale, like all the things that they would, right? Team allocation, marketing, rewards. So you handhold them through this process or fast track them through this service. So, okay, I get that now. I think this is very clear. So what can I do with it? So once I've created this section and I can see allocation specific to specific group, subgroup, what is the next?
So the next step from building this out and proving this model is going to the cap table. You're going to raise funds as a project, right?
Yeah.
That's the next logical step.
Mm-hmm.
So we've got a few different tools, and main one being the automated onboarding, which is just think of it like a Google form, essentially, except it's native to the platform. You accept someone who's filled out like the Google form side of things, and it will bring them directly over onto the cap table, essentially. So keeps it nice and neat.
Okay.
I reference Google form, but it's nothing like a Google form.
No.
It's very. Yeah, I'm just trying to speak in terms so people kind of understand. Oh yeah, it's like that, But once they're in here, we've got a lot of control over, and these are just like fake people, but you can see who they are, what they're about, what rounds they're in, if their wallet's been connected. You can drill in, and or if there's a strategic ad being promised. And you can go a bit deeper. So you can go right into their profile you can see their display picture, their phone number if they put one, Telegram handle, a deeper view of their strategic ads, so all of their social profiles that they may have provided, as well as what allocations they're a part of. If they're a part of multiple in the cap table, they'll show up here as well. A bit of financial information, again, for the projects. And you can also import multiple wallets against a single person. So pooling groups is one, that would take advantage of that. And, it keeps that side of it really neat. And you've got your total tiles at the top here. So how much has been approved versus requested. So you can track oversubscription for each round, as well as the amount of tokens out of the total bucket that have been allocated to that round. So you can see, how much is left at a glance on not just the monetary side, but the token side as well. And you can collapse it and view different rounds.
Right.
As you go down, there's team rounds that are, in here, advisory. So, you've got different, buckets that you can allocate people to. And when you go to deploy your vesting schedules, all of the unique information that belongs to that round, that bucket, is imported into that vesting schedule. So there's no mishaps. Yeah. So once they've done that, once they've filled out their cap table, the next step is to deploy, hopefully. Then they would come over to our deployment engine. And if they've already got a token live, you don't have to worry about this. They can bring their own token. Doesn't matter. Because it's a trustless system, as long as the wallet that they're signing the distribution or the vesting contract holds the tokens that belongs to that contract address for that token, they're authorized to create those vesting contracts. So our system can execute that, and away they go, basically. Or if they don't have a token minted, they would mint one through here, and away they go. So that's the full circle, I suppose, on the Web3 side of things for the founders tools.
Right. So if we go back to
the cap table,
the cap table, right. I think I was just looking at it, how detailed that is. It's not like a traditional Web2 business where you would have maybe a handful of angels will come in and then subsequent, Series A, Series B, Series C. You're literally talking about maybe 100 people altogether, right? But in crypto, you could have thousands of people that are perhaps
Oh,
participating
yeah.
around. And I can see why it becomes so complicated to manage different roles. And I really like that part where you can break down individual names connected to their social handles, to whatever you've perhaps promised to them.
Yeah.
That was quite neat. One question perhaps I was going to ask you is, can a retail who wants to participate in this round, can this see, one of the things I liked up there on the screen, you're showing what percentage of the round is filled, right? And that's a very common thing people want to see, if it's filled half or if it's filled for 75%, because as it gets filled more and more people will jump in. So I want to know how much it's filled so I can come in.
I know exactly what you're saying.
Yeah.
So yes and no. So let me jump over to what the investors get to see, and I'll quickly just sign into one of my 10,000 accounts.
Right.
So this is you, the investor. This is your side right now, and you can set up your profile. This is my profile, my ugly mug here, and all of the details and such that I can fill out.
Yeah.
And basically, you've got your investments that you're a part of, and what you're talking about is more so the gem field, which is where you can see projects that still have rounds open, but you're not yet a part of them. Okay. So that's where it's like a yes or no. It's coming soon on that side. But let's just say you're to come into here and view a project that you are a part of. You do get to see a rundown of the tokenomics and the vesting schedule, which I'm sure you've heard of a lot of projects saying, oh, by the way, we've changed our vesting schedule on, like, you don't find out until it's too late, right?
Yeah.
Exactly. So this displays what's actually going to get minted. It cannot be fudged.
I see.
This is a one-to-one representation of what is going to be on chain when it comes time to for that to go on chain. You made a good point about the what round is how oversubscribed it might be. That, like I said, will be visible in this gem field area, which is ta-da, coming soon, but not quite yet.
That's very cool. You showed us the tokenomics part, you showed us the cap table part, and then deployment part. And this is the other side for investors that I'm looking at, right? So this is the investor portal.
It is. Right. And it also has a link to the claims portal, which is it is what it is, right? That's where you go to claim your tokens. Right. So projects, again, they don't have to build this themselves. That's the beauty of it.
I see. Perhaps a silly one. Where does the money transfer happen if I bought in, 5 Ethereum?
Not on our platform. Yep. So we don't handle that. That would require a money transmitter license, which we do not have. So we don't currently do that. That is something that we are looking at doing for some of the Gemfield items.
I see.
But as of this stage, we do it. We just help founders do it the more traditional way. So oftentimes you'll sign a SAFT agreement. That SAFT agreement will then have like a wallet address that you send the funds to once you've signed it.
I see.
And whatever chain that might be.
Right.
So you can look at us as a facilitation layer.
Yeah.
In many respects.
Right. So and Corey, as you mentioned, the SAFT, which is a simple agreement for future tokens, right? Which happens.
Correct.
Yeah, for a lot of VCs. So you're not actually facilitating the payment side itself. You're taking care of really the bookkeeping side, if I had to put it that way.
Yeah, I mean, that's the simplest way to put it. It's a lot of the logistics and bookkeeping and just keeping that data model really tidy, as well as cost saving, right? There's a lot of reductions that take place. I mean, the investor portal has KYC built into it, so that the projects don't need to pay for that. Not just that, but you, the investor, once you KYC'd once on our platform, never again. That's it. So the more projects and such that take advantage of this, you start to sort of reap the benefits of that as well. Because I don't know about you, but I've done KYC, probably at least 30 to 40 times now. Yeah. And it gets boring, right? So
yeah. Oh, 100%. I mean, that's a big big
Yeah.
plus for investors. I mean, that's literally what crypto is today. So you're trying to perhaps create some processes and perhaps some new ways of doing
Yeah.
things.
It does. It adds a trust layer to it as well. And look, it's not you can't prevent everything from being circumvented, but it does, like you said, it shows that visibility. You can see if you're on the cap table.
Yeah.
First and foremost, that's a big one, right? Because not only can you see what you're on, but you can that you're on the cap table, but you can see what round you're in, how many tokens you're getting.
Yeah.
And you don't need to guess, right? And if you have a separate spreadsheet that you might track all of your investments on our platform and outside of our platform, you can easily see that, add that data to it if you wanted to. And, happy days, no more guessing.
Yeah. I'm assuming this, all the individuals are KYC.
Yeah, so we don't KYC against their wallet yet.
Okay.
And reason being is because in here, in the profile, you have a wallet hub where you can add a name and the wallet address and select what chain that you utilize that wallet on the most. The reason being is that if you're anything like me, you invest in a lot of different projects, and it's a pain in the ass digging through 40 wallet addresses on MetaMask just to assign one to a project. So we allow them to assign the wallet through the wallet hub that they have done, that they've assigned there to their investments. That being said, once we do open up staking, you've got to sign a transaction from that wallet, right, in order to, do that. And by that rule, you've got to have access to that account.
Right. Yeah, I think that's a good answer, but perhaps what I was looking for was a lot of people are not happy to give you or do KYC to get into a token, right? I don't want to do KYC. I want to just go and get the
forced. No, so it's not forced. Let's just say we come back here and a project, they've come on board with us and they've already pre-onboarded half of their cap table previously before they found us, and they've imported that in here, right? They can just check this box and it manually approves the KYC, and happy days on that front. They're happy to override that. Essentially, we don't force them one way or another because we don't know what jurisdiction they're operating under.
You can't force everyone, right?
No.
Yeah.
No, and it's not our job to enforce that either because, we supply the infrastructure for them to hopefully abide by the laws of their jurisdiction. But it's entirely up to them, right? We're not going to hold their hand through all of that. That's that's what their lawyers are for.
Anything else on the demo side that perhaps we haven't covered off?
Yeah, so maybe not so much token deployment side, but what we do have is on our real-world asset side, which I can't give you a proper demo of the registry of the assets and such, just because they are real, they're real companies. But what I can give you is, I guess, a bit of a sneak peek here. Let me just quickly enter this. So a bit of a sneak peek of a marketplace with some real assets in here, which are quite frankly, like this one's worth more than a couple of $1 billion, this total asset, where that you could come in and purchase an amount of tonnage and do that. So we do have that side of our company as well. I know we've just spent the last however many minutes discussing what we can do with founders of projects. This is what we do, I suppose, out in the real world.
That's very cool. So what am I buying here? I'm buying SWS Carbon. No, that's the name of the.
So SWS Carbon is the certifier. This is a tokenized coal mine, essentially.
Right.
And the reason why this has,
I like it. Yeah. Why didn't you show it?
So the reason why this is tokenized, just so you understand as well, is it's called a emissions reduction asset. So not to be confused with a carbon credit. This is 2 steps before a carbon credit. So it goes emissions reduction asset, which then has emission reduction units, which is what you can buy right here.
Yeah.
And then those units can turn into a credit if you go down that path, but you don't have to.
Okay.
They're more, to be honest, they're more useful as just emission reduction units as a whole. So what they've done here, though, is the emission reduction unit is because they have purchased this coal mine, they've decommissioned it, and they've put a 50-year legal agreement in here to state that this coal cannot be touched for this timeline. And so there's a quantifiable amount of carbon reduction because it will not exist. So your carbon credits are generally issued from sequestering carbon that already exists in the atmosphere by planting forests or doing some renewable, thing. This is a little bit different. We're actually preventing the carbon in the first place. So it is a slightly different asset type, but in my opinion, a lot more valuable.
Yeah.
And this particular asset has actually seen a proof of concept transaction against it in the realm of $20 million by a UK bank. I won't name that bank just out of their privacy and such, and I quite frankly I don't know if I'm allowed to. We'll leave it at that on that one. But I just wanted to show that this is the other side of our company of what we're doing here. We've got $32 billion of emissions reductions assets minted on the platform through the asset issuer Arx Veritas, and our platform made that possible for them. So
that is very, very cool to see, not only the RWS side, but obviously, listening to you around the carbon reduction side. How does that fit into the overall Bluebird? Because this is a totally different side of the business.
It is. So at the end of the day, the easiest way to reconcile it would be to think of when you run a cap table. It is a registry of people. And whilst we're not tokenizing these people, we are putting their purchase on chain, which is what the tokens are that they're purchasing.
Yeah.
So you can think of the Real World Asset Registry as a registry not of people but of assets, and how much of said assets, and then you can purchase them, right?
I like it.
So that's probably the easiest way to explain, the underlying ecosystem of, the foundation of it all. And it was also just a natural evolution of our business. It was always in our pipeline. We did fast track it due to one of our partners. But essentially, it's a natural evolution of we're deploying tokens, investing contracts for projects. We understand thoroughly the legal frameworks on real world asset tokenization.
Yeah.
So it made sense to kind of, readily branch into that with our software stack.
Yeah.
Granted, it doesn't look like this. It looks very different for the asset issuers because, well, they're dealing with individual assets and all of the parameters and legal documents that go with that. But for all intents and purposes, it's instead of a people registry, it's an asset registry.
Yeah. How do you actually manage the carbon reduction? Like, what is the unit of measure there?
Yeah, so that goes down to the certification. So the certification defines the methodology of how that's calculated, and that methodology might say, let's just say for a coal mine, for example. It's a rather complex one, but we'll use that one.
Yeah.
You've got the machinery that is used to extract it. You've got the processing of the raw coal ore. You've got the shipping to wherever it's got to go to. Then it's got to get burnt. So all of those actions produce emissions. And I'm sure there's others that I've missed as well.
Yeah.
Now, the methodology calculates how much over a time period based upon how much coal is in that ground. They can calculate how much total carbon would exist to extract and then eventually burn that coal. So then there is a European regulator, and forgive me, I do forget the name of who they are, but they set the price of those of that reduction based upon the quality, and how much documentation is what determines that quality. So in these cases, they've got, I mean, well over 300 pages of documentation for this model.
Right.
It's it's very in depth.
Yeah.
So they've got the highest tier essentially of that that quality rating, and therefore that's what that price bracket falls into.
Yeah, it sounds very similar to REC, renewable energy certificates. I know you clarified it. It isn't, but I think the process sounds similar.
There's likely some crossovers. The same with carbon credits. They go through a verification standard. They go, you've got gold standard, you've got Verra, you've got different methodologies that they use. Each and every, I mean, heck, you could spend days talking about this. I mean, you've got every country that has their own set methodologies defined by, sometimes it's universities, sometimes it's governments, and sometimes they're trustworthy methodologies, other times they're just not. And those credits don't get globally recognized. So what we've got here is not only of these assets, these ERAs, not only are they globally recognized, they're actually insured. And that has never been done before for a carbon asset. Because they're too, I mean, you can greenwash them, right? So there's no proof of who has what in the regular carbon credit world. But then again, most ways carbon credits are generated is that they're planting of forests, and then they sell against that forest 100 years into the future. What if it burns down, right? What if there's a hurricane or something? They've sold credits against something that might not actually exist 50 years from now. So that system's broken, and that's why they just don't insure them, because there's too much risk, too much liability. These are very much quantifiable. The other assets that are on platform are capped oil wells. So they've, they were a leaking oil well. That's just, it's a derelict, rundown piece of equipment. It's emitting a lot of gases, as well as sometimes crude oil. And what they've done is they come in, they measure it, they know exactly how much is coming out over a time span. They then cap it. They set measuring instruments up to see if it ever leaks ever again. And they use that methodology specific to an oil well to calculate, okay, well, this is how much carbon we've now prevented from ever entering the environment. And therefore, that's how they can sell that quantifiable asset.
Yeah. That's amazing, and thank you, Corey. We can turn off the demo part, I think.
No worries.
Cool. Just on the RWA side, what chain you're using? We didn't really talk about the blockchain side of things so far, but what chain are you using? RWA?
Of course. Yep. So RWA specifically, at the moment, we're utilizing Red Valley Network for those assets, and that was largely due to client choice and partnerships as well.
Okay.
And why they chose that one was because it's a public permissioned blockchain. So they need to KYC on that chain in order to actually move assets from one wallet to another, which adds a baked-in layer of compliance. You might see other token platforms like Tokeny, for example. They came up with their own standard of token for reward assets that had compliance built in at the token layer. Now, that's all good and well if they want to use that, that standard. That standard's not supported in a lot of wallets. That standard is also not supported, across a lot of different, other platforms if they wanted to go resell it. So the Red Valley Network, it's just ERC20 we can use. So we're using 1155 standard for this particular asset, very widely accepted. And, so very flexible at that point, and it allows for that global access.
The fractionalized 1155, right? Cool. I guess outside of this demo part, quickly touching upon the regulation part, assuming that you guys have gone through the Clarity Act that just passed through, I think, House and is waiting for Senate approval. Any thoughts on that, specifically given you are playing in a regulated space?
Yeah, definitely. GP, did you want to kind of touch a little bit on this?
I mean, both the Genius and the Clarity represent kind of major steps in regulatory certainty. Clarity Act, in particular, provides legal framework to distinguish utility tokens from securities. So that's kind of a game changer. But for us, that means that we can confidently embed compliant workflows. So automated tokens vesting, SAF life cycle tracking, kind of directly into the platform. So we're aligned with how the Clarity Act interprets decentralization milestones, and so that kind of allows startups to kind of structure their launches in phases, and kind of reduces legal ambiguity, really.
Yeah, I think that's the main one that perhaps matters to you guys, right? And especially on the security side, because I don't believe you'll be dealing a lot on the commodity side, like the fully decentralized project. I don't think they need. There is no such thing as a cap table for them, right?
Well, that's a good takeoff point, though. Our system is end to end. So think about tokenomics to claim, or it's bespoke in the nature that it's modular. So if you want to use the deployment engine, you can. So there's really kind of we've talked about an end-to-end cycle, but that's again another facet for us. Like, so we have these facets of our system that allow us to cross many different ways and scale. And it was by design when we were looking at the model as a whole, which is what makes the business model itself very attractive, is that there's this kind of resilience built in for economic upturns and downturns. So because we're operating in Web 2, because we're operating in Web 3, because we're operating in single end-to-end points, bespoke RWA, and then bringing it into like on-point need modules, it builds and takes the ecosystem and kind of extends it out the entire opportunity of use.
Right. On the network side, so which ones are you looking at to extend the networks to? I know you mentioned Solana is going through a sort of auditing process now. So what other chains you're looking to add, and what are the bases for you to decide? Is it the developer network?
Yeah, I think that's a large one you touched on. Probably most of our key criteria, to be honest. It's really network usage is one of the biggest. And that's why we believe Solana should be the next that gets implemented. Meme culture has certainly seen to that. But that's really the main draw is where are people deploying, where are they wanting to deploy, and we make sure that we support that for them as well. That being said, if we don't support a chain as well, and a project's like, hey, we love your platform, but you don't support our chain that we want to deploy on, that's fine. We'll support it, right? We'll just go out, we'll get it done, we'll get it audited if it needs to be audited, if it's a fresh layer, and we will support that for them. So we're not there to create a bottleneck for these founders. We want to really just enable them.
Yeah, cool. And what are the costs for a founder to go through your platform? We haven't talked about the fee structure you charge.
Yeah, so that one, right now at least, we have I suppose a special package, but it's usually around $10,000 for the first 12 months.
Okay.
And that's the full suite. No access barred at that point. And then if they need it past that 12 months time, depending on which modules they kind of go for, it could be anywhere as low as $5,000 or $2,500 per year after that. Right. So it's very much pick and choose of what you need after that point. But and you might ask, why so much up front? And that's because, one simple reason. You can launch a token and a project very quickly in our platform if you wanted to. If you had all of your ducks in a row, you could literally do it in a week, or less. So that then would be a rather bad business model for us if we were like, just pay for a month and then they've got everything for free, for that, and they're done. Right.
Can you charge the founder after they're raised? Is that possible? Because I'm sure it will open up the deal flow for you guys if you don't charge them upfront 10 grand and charge them perhaps once in case they raise, because some might never end up raising anything.
Yeah. Yeah, we definitely do try to work with founders, especially those who are quite early, in their stage of maybe they haven't started any of their raise yet. And, they still need that help with their tokenomics and such. So absolutely, we work with founders on that. That being said, I think the large majority of our clients have at least taken in some amount of capital to get where they are, right? Because they've got to have their company registered, they've got to have legal documents. There's an amount of capital it takes just to get going anyway. So in the grand scheme of things, a $10,000 ticket is probably going to be the least that they spend on what they're doing as well, right? So
and you want to obviously have a filter, right? You don't want to work with someone perhaps very early.
To a degree. To a degree. We can also soft incubate as well. We have I've personally incubated a few projects in the past and through one of my other companies. So it is an experience that we do have. So I would say it depends, right? We're not going to obviously want to incubate a project that has no real fundamentals, like just bad business model. They're just raising for the sake of raising capital.
I see.
That's not really where we would want to focus. We want quality in that sense, right? So I don't want to try and open the floodgates to just any old any old project. I mean, there's got to be lines drawn somewhere.
Yeah, there's plenty of those on crypto, right?